Hi guys, Lee Gettess here with the Market Sense for the week of March 21st, 2017. We will look at some charts that are provided to us by the Trade Navigator software from Gettess and looking at weekly bonds here. This looks like this could be a successful little retest here, just a marginal new low and back up. That's a possibility, and since they tested the bottom here, the next thing you'd expect them to do is to test the tops, right? That puts them up in the, let's call it 152.12 area in this contract. Certainly for this week, this is clear resistance right here in the 150.08 area. And that certainly could hold them. I mean, I'm not saying they have to go immediately back up, but in the big picture, you would expect them to at least test these highs at some point. Now, if they get up there, they've got the old highs, they've got the mid-Keltner at about 150, 116. So even from where they are right now, 50.08 and up there, there's plenty of resistance in here. So it's not like they're just going to boing right up through there. But they certainly could. The lows they broke down from back last year are up here above 158, which would match the upper Keltner channels. That's not out of the question. Of course, they could just turn right back down from here because going into this week, we actually expected support should be somewhere in the 147 area, and instead they just kind of opened higher and stayed there, but they could turn back down again and still sort of be in the process of bouncing up. So no low-risk opportunities here because they are at resistance, but they kind of look like they want to go higher. Stocks don't. Just sort of a big surprise Tuesday. They were higher in the first half hour of the day session, and then kaboom. The week, there was very, very weak potential support here in the 2371 area. And I say weak, I mean, if it had held, it would have been strong. They would have just rocketed up out of there, but they weren't a real high probability to hold that. Once they get down here in the 2350 area, though, that's pretty good support that they basically just laughed at. They've gone quite a bit through that. Problem we have here is that you've got support anywhere from right here at this low down to, oh gosh, I can find some at 2325. The 2300 level is about where the previous swing highs they broke out from are. The mid-Keltner's down around 2280. I mean, there is so much room for them to go down here. But they're still in an uptrend, so they could stall just about anywhere in here and turn back up. Again, going into this week, we kind of thought we might see them up here testing the highs again. They looked pretty good last week, and I thought the 2371 might hold as support and drive them up. And that's still possible. We could see them at 2388, but boy, they sure don't look like it after Tuesday's price action, and it kind of looks like globally the rest of the stocks are in sympathy with them and tumbling a little bit. That's not a good sign. Now, I will say this: if we get global sell-offs, the tendency is for the S&P to open massively lower and turn everything around, lead the globe back higher from there. So I'm not predicting that, but that's a possibility. It's probably how it will end when it ends. I just don't know exactly when it'll end. But this is more weakness than we've seen in quite some time. But again, there is so much room for them to drop and yet still be in an uptrend. Low risk just isn't here, I'm afraid. So that's what we've got for you today. I hope you can find something profitable to get yourself in.